Hey guys, John Paulamy here, Actionable Intelligence. Today is Saturday, June 15th, and this is a weekly market update. The disclaimer, anything that you hear or see on this podcast or video is not investment advice. I am not a financial advisor. I cannot give you investment advice. This is for informational purposes only. Please do your own due diligence. It's your money. It's your responsibility. Okay, so one of the things that I wanted to talk about was the angst that I see a lot of times. I've talked about this before, but I got some data here. I think this is from a report that Ocean Wall did. They're one of the research firms that I follow. And I've talked about this before, but this was some good data that was shared on a Telegram channel from another acquaintance of mine. And I don't have access to the full report, but this is from the report. So basically, as we've said before, this uranium sector is a volatile sector. There's a lot of money coming in and out. There's a lot of retail participation, and consequently, that leads to volatility. Part of the problem, I think, is that, as I've said before, when you're dealing with contrarian investing, value investing, I've encouraged folks in the past to really have a thesis, go through a thought process, an exercise, write down why you are putting your money into a certain investment or speculation, if that's the case, and then really think about it, right? Why am I doing this? Am I doing this because I saw a video on YouTube and it sounded good, so I just opened up my phone and started buying uranium stocks or gold stocks or what have you? Or did I take the time to research this and understand what the trends are, what's happening, and why I'm doing this? Unfortunately, I think a lot of folks don't do the latter. They just react on the former. We call it here at Actionable Intelligence Alert, chasing shiny objects. But anyways, this is some data. I've shown other data on specific stocks, but this is the drawdowns when drawdowns mean like pullbacks in URNM. Okay, so you can see just since 2020, there's been 8 double-digit pullbacks just in URNM. Okay, but over the course of the same time, I believe that the stock is up hundreds of percent, a couple hundred few percent. And so you have these pullbacks. This is what happens in a volatile sector, in a resource sector bull market. You're going, the trend is your friend. Over a 10-year period, when you look back at this, you're going to see the chart of URNM basically go from the lower left to the upper right. And it'll be punctuated with these periodic declines, okay? And so what happens is, obviously, as you can see, you had February to March 2020, 32% decline. That's in one month, over a couple months, and that shakes people out. And you said uranium was going to go up, but it's down 32% in 2 months. Yeah, but it then it recovers because the long-term thesis is in place. And so what you should be doing, I mean, I didn't go through the exercise, but what somebody should be doing is looking for these pullbacks, knowing that it's a volatile sector, knowing not just to jump in when uranium spiked to 106, and it's all over Twitter or X, it's all over TikTok, it's all over YouTube, and then you have a bunch of Johnny-come-latelys come in at the top, okay, and then you get rug pulled for 32% or 40% or 37%, and then, gee, how come this doesn't work? And so I think if you understood you were in a bull market and you use these opportunities as you accumulated more cash to buy on these pullbacks, that's what you do in a bull market. I've stated that before. I don't know how people aren't making money in this bull market. It's a long-term, multi-year thesis. It looks like it may even be turning into a multi-decade thesis, okay? And focusing on the supply-demand situation and the fact that it is a big problem and it's not going to solve itself without massive investment that still isn't happening. I mean, you can listen to, there's the guy from Ocean Wall. I'll put it on the free email this week. He got interviewed this week, and he said, basically, these guys do pretty good research. They actually came out with an updated their updated uranium thesis. I'll put a link to it. I have a couple slides from it later on. But I forget the guy's name is Ben something. Anyway, basically we need 5 more Kazakhstan situations. Where are these coming from? There's no shortage of resources in the earth. There's no shortage of uranium. We're not going to run out of uranium. What we have is a shortage of capital investment. What we have a shortage of is mining talent and labor. What we have is, a dearth of will to proceed. And so what we will see is a continuing slow rise in prices. Maybe we see a spike. Okay, no one knows the future. And as the price goes up, it's going to continue to attract capital. I mean, the low hanging fruit has already been picked, right? We've had a lot of brownfield projects come back online. That's the easy stuff. Now we need the multi-billion-dollar large projects to be announced. They have to be financed. They have to be built. This is a multi-year situation. And in the meantime, you continue to build more reactors. The supply keeps going up. And as we've talked about with this AI situation, this is the long-term wind in the sails. And so over this 4-year period that I have of these charts, you've had 8 double-digit drawdowns. I've talked about this ad infinitum. Okay. This is what's going to happen in any resource market. So you have to look at what's the long-term deal on this, or am I in the middle of a cycle? Am I at the beginning of a cycle? What's happening with capital spending? Is it going to get, because these things do solve themselves when enough capital is thrown at it. It's inevitable. That's why you have the cyclicality. That's why you have to understand cyclicality. That's why you have to do some research and some work. And so again, as I've pointed out before, if you're one of these folks that just gets on there and says, hey, I'm entirely disappointed, I'm fed up, all these gurus say that uranium's going to go up and I lost money. I don't know how you've lost money as long as you do this correctly. You cannot lose money. Okay, you shouldn't have lost money even with all these drawdowns. These were opportunities to add to a position as you had more capital coming to you through your job or your business, wherever you get your investment funds, to add on pullbacks. That's what you do in a bull market, guys. We're in a long-term bull market for uranium. So I don't know how to point it out that's how you do it. I mean, it's changed my financial life, and it's going to continue. And so you have to think about it a longer term situation. Okay. Where we have this demand there is an infinite amount of demand for energy. Okay. Because there's infinite wants among humans. Okay. Unless they shrink the population, like they're talking about, or something crazy like that. Otherwise, people want air conditioning. People want more devices. People want, whatever. And then we have this push to electrify everything. People want air conditioning. People want data centers. People want all this stuff. And it's just a constant, not just in the US, but everywhere else in the world. We'll show some slides about that. So you have to look at this holistically and what's driving this. What are the main driving factors for this trend? Are they in place? Will they stay in place? For how long will they stay in place? Is capital coming to alleviate this supply shortage? Another thing that a lot of folks don't grasp, and I've said this before, and I'll keep reiterating, I mean, sometimes you have to repeat things 8 to 12 times for people to get it sometimes. The market and these uranium stocks, or any stock or any investment you own, doesn't care what you want or what you need out of it. It's going to do what it's going to do. Okay. And so the best you can do is, again, get yourself in a good business with a trend, and understand that you're in a bull market, and that in a secular Secular means longer term, multi-year bull market. There will be cyclical, like these 8 cyclical declines inside a secular uptrend. And so you should take advantage of that. You should make this an opportunity, because maybe, if you came in because you heard a video when everybody was excited when uranium recently spiked, and you shot your wad and then it pulled back and you were caught up in one of these drawdowns, well, you're going to be disappointed. But why did you do it like that? What was your thinking? What was your rationale? Was it an emotional decision because you got excited and you got FOMO? Or did you have a thought out thesis and plan to do this? And you have to be patient. If you're patient and you catch these trends, you can change your life. You can change the life for your children and grandchildren. You can do a lot of things. You have to be patient and let it play out. And when these things happen, if something pulls back 40% and nothing has changed fundamentally, I buy. It's the old canned peaches and heavy syrup analogy that I use all the time. If I like canned peaches and heavy syrup and they go on sale at Kroger, 50% off, I ask my wife to buy more cans because that's what we should be thinking. That's how you should think about this. If you love something and it's in play, it's still dynamically doing what you want it to do, or it's not. Let me rephrase it. If the thesis is still in play, then you know what you got to do. And then if you're not, it's summertime. Why are you worried about drawdowns? And go to a baseball game, go boating, go to Disney World, go to Dolly World. I mean, I don't know. Just find something else to do except focusing on the daily, price of uranium. The trend is in place. There's going to be fluctuations. Use that to your advantage. Use other people's impatience for your gain. And so here it is, guys. I mean, we've seen all these charts. This is from the World Nuclear Association. Uranium supply deficit projected to widen. So, you can study this. It gets a little busy. It's hard to look at this. You have your existing mine. You have the dates around here. So we're right around here, right? Short of here. So this is projected supply is projected to go down over time unless we get some more investment. Here's your restarted idle mines that we've talked about, or existing mines, restarted mines, mines under development, planned mines, prospective mines, projected worldwide reactor demand. And so you see that the demand is basically now inflecting to a 45-degree angle. Again, you can't necessarily go out to 2040 and just assume this is going to happen, okay? I don't know if it's going to be at this rate. It may be more, it may be less, who knows? But we do know it's easy to track in real time the reactors that are coming online. They're announced, they're planned. Nobody's hiding this. This is not, top secret information. And it's the same thing with the supply sources. There's plenty of resources that are tracking all this. So it's not hard to see what's happening. And so when you start talking about, okay, well, we have existing mines. We know the mines that are operating. We've known, the mines that have restarted, Encore, Langer Heinrich, Boss Energy, what have you, UEC, I think, whoever. And we know that the ones that are trying to be restarted, but these are, in the big scheme of things, these are just raindrops in a bucket. They're not going to solve the issue. So then you start talking about mines under development. Okay, what's the timing? Are they going to run into permitting problems? Are they going to have labor issues? What is it? If they said it's going to take 5 years, is it really going to take 10 or 12 years? Then you have planned mines. Now we start getting into, visions of sugar plums. What's really happening? And then perspective. So as you can see, this is the story. Rising demand, relentless rising demand, supply challenged, and a renewed acceptance and backing of nuclear energy around the world by governments and others in private industry. We've talked about, Larry Fink and all these people at Amazon and Google and all these places that are all getting behind this because they see it. They need the power, and they don't have the power. And, nuclear, natural gas, I think, is going to be a beneficiary of this in the short term, but it's not going to be the long-term solution. Okay. Nuclear is going to be the solution, and it is the solution, and it's happening. So this is a quote from Mike Alkin. The uranium supply gap is, quote, like a freight train coming down the tracks. So if you understand this and you have done the work, I'm not just saying accept what I say or Mike Alkin says, go put a spreadsheet together. The information is easy to find. Start at the World Nuclear Association. You can make different projections. There's people, I think I gave a Google sheet. People track this stuff already. People are already doing this work. There's a Google shared drive that has all the uranium news, and you should know in real time when new reactors are coming online and when new ones are coming online, because people are already tracking that for you. So it's not hard to find. And so, you just, again, use these drawdowns to your advantage. Take the people that had FOMO, that bought and then sold, and use this volatility as your slave. Use it as your, free money, because you know what's going to happen. You see what's happening. And this is like a long drawn out process, guys. It's not something that's going to happen next week and, change your life next week. But, I've been in this trade for 7 years now, and my financial condition just from uranium has completely changed. So I think if you look at it from that perspective, you'll do a little bit better. So here's some slides from the Ocean Wall Nuclear Deep Dive updated. I'll put a link to it in the show notes. I mean, this is just from the World Energy Outlook, right? Expected growth in nuclear power production versus 2020. So here's where the estimates were in 2021 and now 20. So just in the scope of 1 year, you see how nuclear's turned the corner. It's more and more, the estimates are growing just from policymakers and from advocates or tracking entities just in 1 year. And that's 2022. So for 2030, expected growth in nuclear power production versus 2020 was 16% in 2021, the estimate. And then the following year, it was up not 25 to 25% growth. So you see, and this is probably going to keep increasing because people get it now. They see it, and I think this is going to gain some momentum. It's going to take some time. These are long lead time items, but it's like somebody else said, Mark Nelson, or I was listening to Doomberg and Adam Taggart interview, doing what the Energy Secretary Grantham said the other day in that speech at Votal 3, 2 down, 198 to go. She's talking about reactors. If we do that, that would be, as Doomberg said, and I think it's a great analogy, akin to what Eisenhower did during his administration when they built out the interstate highway system. He gave a thought exercise during that interview with Adam Taggart where he said, think about the United States and where we would be if we didn't build out the interstate highway system. There would be no Amazon. There would not be the plethora and ubiquity and ease of getting the goods that you want. It changed the entire country and the spillover effects and the benefits of that can't even be calculated. Okay, it's in the trillions and trillions of dollars. And the same thing could happen if we do actually build 200 1,000 megawatt reactors in the US. It would completely change the country for the better. And as he said, we used to be, now it's going to be difficult because we financialized our economy over the last 40 years. It's not something you're just going to snap your finger and it's going to happen in the next month or two or the next year. It's going to be a long process because we've atrophied our engineering, scientific, manufacturing, trades, everything in this country as we financialized our economy and moved a lot of our that kind of stuff, those choo-choo train industries, that dirty stuff that we moved it offshore. And so now we have to kind of like rebuild that. And that's why there's a tremendous amount of opportunity going forward, because this is going to happen. I'm not saying that we're actually going to build 200 198 more reactors or whatever they're calling for by 2050 or whatever. But that trend is going to happen. We're going to be moving towards that. Will we accomplish it? I don't know. But just doing something to that level is like the space program of going to the moon or what have you, or the interstate highway system, something big, a big vision. And the spillover effects of doing that are going to be tremendous. And so when you're competing with places like Japan and India and all these other places, and the BRICS are rising, that's where they're going. So, even if the US doesn't do it, your economic competitors will be doing it. And so it behooves us to be the leaders. We have the biggest and largest, or the largest nuclear fleet in the world. We should not cede that to the rest of the world. We have the engineering capability. We have the dynamic nature of the U.S. economy, the entrepreneurial nature. We need to fix certain things. We need to streamline the NRC and the permitting and oversight, not make it less safe, but remove burdens and get away from this one-off reactor mentality and turn this into modular development, streamlined, and then start building the ancillary industries, schooling, and trade, funnels to that. And, nuclear operators, nuclear welders, these are high-paid jobs. Okay, you're talking, somebody that works in a nuclear power plant. I don't know what the wage scale is, but I'm quite sure it's, $80,000-$100,000 a year, just straight time. And there's overtime and outage work and all this other stuff. So these are high paying technical jobs with a lot of opportunity. And a construction project is, a couple few years. It's not like some solar plant where I have semi-skilled workers, most of which are foreigners or recent immigrants to the US, low skill, low wage. Okay, we have solar installers that make $12 an hour and they're from Haiti. That's not the best way to move the US economy forward. Education, trades, apprenticeships, ancillary industries where we manufacture the components here, that's where the big money is. That's where you rebuild the middle class. And, so I think that this is the trend. And then for us, people that invest in the industry or uranium investors, this is just going to be tremendous. And again, if the United States doesn't do it, the rest of the world is already moving in that direction in the global East and South. So another chart, future contracted coverage rate of US and European utilities. This is from the EIA. This isn't some blogger. So we're here 2024. And U.S. utilities have their future uranium is only 61% covered. So, the Europeans are currently well supplied and have their usage, their future contracted coverage is looking good, but that's projected to decline also. But the U.S., this is another big win that's in the sails. They haven't really come to market yet and fulfilled their needs. And they're going to have, it's back to that, what I've talked about before, where I've suggested it's going to be similar to, or it has the possibility of being quite similar to a musical chairs. Is the music going to stop and there won't be enough material for everyone? So if you're a fuel buyer at a utility, have you woken up? Have you gotten the memo? Or are you living off the old paradigm from the last basically 15, 20 years where there's plenty of material and I don't have to worry about it. It'll always be there. That may not be the case. And so I think I might have shown this chart already, but I wanted to reemphasize some because it feeds into some recent testimony that was given here in Texas, which I'll get into. But I think I might have shown this. I don't know who this is from. I don't know if this is EIA or I kind of cut off the source. But anyways, data center power consumption by providers, enterprises. So you see combined annual growth rate, and it kind of cut off I just wanted to get the overall gigawatts here. What I wanted to point out in the slide is you see this is a lot of it's going to be from AI and data center craze projections. Again, we don't want to just literally project, but what I wanted to say is it is these numbers, like even from here, they're looking pretty close. The problem is that the utility industry, the electrical production industry, transmission and distribution industry was only assuming, this is before the craze took off here and before this demand started kicking in, they only were projecting a 0.5% combined annual growth rate. So the utilities, the providers, the industry, the workforce, it's not prepared to grow this fast. Okay, this is going to be a problem. And it's going to require trillions of dollars of investment. Again, this is something else that the government's probably going to have to get involved with. Okay, the problem, it's not hard. There's a transmission line up by Temple, Texas. I don't know the capacity, but if you go east of Temple, Texas, towards Rosebud and those areas off of 35, I think it's 35 goes through there. Everywhere you turn, there's solar plants going in. And so, and you can see this massive transmission line. I don't know if it's how new it is, because I got a project going on up there and I was driving around, and everywhere you turn, people are throwing in these solar projects and feeding into this line. Well, that's good because you have the capacity on that line to accept it and throw these plants up. But that's not the case everywhere. That's a limiting factor for a lot of projects. I have other projects I've looked at in some southern states like Mississippi and Louisiana that are constrained because it's not a problem to actually build the generation plant. The problem is there's not enough capacity on the transmission line to get the power where it needs to go. And people have been ignoring that part of it, because it's easy to throw up these plants on somebody's private ranch, but then, the margins and the ability in the profits and, who's really owning and operating and making the capital investments in these T&D lines. And if you're a utility that owns these things, transmission and distribution lines, you weren't anticipating this kind of growth. You were assuming 0.5. And so you've set your capital budgets and your ability. And so that feeds on into your subcontractors and their labor forces and the supply chain that supplies the poles, the wire, the insulators, the transformers. All that stuff is not ready for this growth. And that's why, you're seeing a company like Eaton. If you want to know what's going on, they supply a lot of electrical gear, controllers, motor controllers, transformers, the whole shebang. They're knee deep in this. And if you want to understand what's going on in this industry, just use them as a bellwether. I mean, their business is booming, and they see it's all gold. I mean, they will tell you where the shortages are. They will tell you what the bottlenecks are. And, if you know where to look, there's all kinds of opportunity. And so we're not ready for this. And if you are, somebody showed this the other day, they were talking about, okay, there might be a recession or all these millennials are complaining. But if you go, somebody showed it on, on X, said, go to any marina at 2 p.m. on a Friday. And it was all these like supercharged racing boats, all these guys with these jacked up trucks. And they're all people that own HVAC companies, electrical contractors, plumbing companies, tradesmen. Okay. These aren't like Wall Street guys or software developers. These are like guys, tradesmen. And they're out there flexing with these, several $100,000 racing boats and a whole line of them. That was, that's kind of a meme. I get it. It's an anecdote, but that's what I see in my business. I mean, I'm at the end of my career and I got people calling me. I don't even respond to the LinkedIn stuff unsolicited. Hey, we're doing this. You interested? Hey, we're going to do that. Are you interested? Here's how much you making. We'll top it. I mean, this is a lot of opportunity in this industry, and they don't have the people, they don't have the material, they don't have the manufacturing capability. Now, this will all come eventually, but that's where the opportunity is. But there's going to be bottlenecks. It's going to cost more. That's inflationary. So all this stuff, again, if you know where to look, you can find tremendous opportunity. Again, I mean, I'm not a big James Altucher fan. He seems like kind of a carnival barker, but he did make a comment one time that I thought was appropriate. I don't know what the total, whatever the GDP of the U.S. is now. Let's say it's $26 trillion a year. So you have 26. Basically, his point was You've got $26 trillion a year raining every year, not just one time. $26 trillion in economic activity in the US every year. And you can't figure out how to raining down, and you can't figure out how to go out and capture some of that. I mean, you just got to know where to look. You got to understand what's going on. You have to understand what the trends are, what's really happening. And then, you may want to be your passion and what you really love is you really want to be the expert. You want to have a deep education on 15th and 16th century Dutch painters, but you got to put food on the table. My advice is go become a high voltage relay tech. You can make 150 grand a year easily. And then, go to Barnes and Noble and buy a bunch of books on 15th and 16th century art. And in your spare time, study it. Okay. That would be my advice. So I think you got to align. Again, it's another example of what I've said before, which differentiates my kind of thinking and people like me, which I look at, I look at it like street smarts, or looking at things, basically looking at things for the way they are in reality, not the way I want them to be. I have my own view on the way I wish things were, but the adult human understands, or should understand, the world that they live in and adapt themselves to it. So here's data center power use. It says data centers. This is from Germany and the EIA or IEA. So this again isn't me just making this stuff up. Data centers use more electricity than entire countries. It says domestic electricity consumption of selected countries versus data centers in 2020. This is 2020, guys, and terawatt hours. So you have data centers, 200 to 250 trillion watt hours. Okay. And then you have countries like Nigeria, Colombia, Argentina. So the data centers are using more than these countries. These are like, pretty large countries. Yes, they're developing countries. Some of them are a little bit kind of basket casey, Argentina and Nigeria. But you see, what I'm trying to convey to you is the potential. You're talking a lot of people here, and these countries want what you want. They want data centers too. Okay. Plus, they want air conditioning. They want refrigeration. They want reliable. You have an expectation because of the PUC during the Depression. When electricity first started in this country or became ubiquitous, you had multiple people generating electricity. You had wires going everywhere. You can look at old pictures. Go on the net and find old pictures. Do an image search of what some of these cities look like. I mean, you had wires going everywhere. It was unregulated. So they finally said, look, here's the deal. And then you had companies going bankrupt. Under fine was the same thing. It was a growing industry, right? When electricity basically became mainstream in 1920s and into the 30s. And then when they electrified the entire country during the Depression. But you just had all these companies everywhere. And so they said, hey, look, this isn't really the best way to do this. So here's what we're going to do. We're going to create territories, monopolies, if you will. The utilities literally are monopolies. And we're going to have one utility delivering power. And we're going to regulate them, and we're going to give them a fixed return on their capital. And so the deal was you had to live up to delivering, 99.9% of the time uptime and keep people's electricity on. And then they will guarantee you a certain return on your investments. So that's basically what they've done. That's not the case. That wasn't the case before. It's not a case in some of these other countries. So in fits and starts, you have different, but all of these countries are going to go in the same direction, but it just tells you how big this data center thing is. And it goes back to this again. And so it's not just in the US where you're going to have this kind of growth. Again, it's an insatiable, infinite demand. And as price goes down, if you do lower the price, you get into or if you get more efficient and then price of energy comes down, it's Javon's paradox. People say, well, we need to get energy efficient. That's what we need to do because of climate change and all these other things. Well, is the more efficient you become and the price comes down, the more energy will be consumed. That's the paradox. And so I think understanding these things and then understanding what that means from energy supply and transmission and distribution. I mean, you're talking about large numbers here. And these, this is just a sampling. I haven't looked at all the countries. This is just something that I saw that it was on X. So this is what I wanted to get to. So this is I'll put a link to this. Is I think it's guys Dan Patrick. He's the Lieutenant Governor of Texas. I believe that's his name. And he had a long comment on X. I'll put a link to it in the show notes. I think it's important. So ERCOT is the Electric Reliability Council of Texas. It is the grid operator, if you will. It's a entity. It's called an ISO. Okay. And Texas is unique among there's like 6, I think, or 7 major ISOs. You have Cal ISO, which is California. You have MISO, which is Midwest. You have, you just got different ones. Okay. And there's these large regions and they kind of tie together, and their goal is to, okay, so you want to bring a power plant on in ERCOT. There's a process for doing that in Texas. You have to go through ERCOT. You have to do submittals and studies. And this is my plant. This is how it's going to affect the grid. This is what I'm planning on doing. There's different parts to it. It gets approved. Then ERCOT puts it into their model so they know when you're coming online, and they integrate it into the model so that you have reliability of the grid. Okay. So that you don't have just people doing things willy-nilly. And so they had some testimony recently in the legislature in Texas, and it was the ERCOT CEO, Pablo Vegas. Let's see what he says. It says, ERCOT CEO Pablo Vegas and others gave shocking testimony today in the Senate Committee on Business and Commerce that within only 6 years, and he puts here in parentheses, that's only 3 legislative sessions, our power grid needs, talking about in Texas, because Texas is its own entity. It's not part of the other ISOs. It's not connected really to the other ISOs. It says our power grid needs will grow from 85,000 megawatts to 150,000 megawatts. So literally it's going to almost double in 6 years. That is much higher than the 110,000 megawatts they previously projected. The 110,000 megawatts was already a big increase, which is why the Senate pushed our incentive plan to build more dispatchable power last session. That's cogen, that's natural gas. 150,000 megawatts is almost double the megawatts we now have on the grid. That's in 6 years, guys. In 6 years. That's in a capital spending and planning world. That's like pretty soon. Let's put it that way. I put another blurb here. It says, later testimony said the growth is due to the increases in population, normal business growth, and artificial intelligence. However, crypto miners and data centers will be responsible for over 50% of the added growth. We need to take a close look at those 2 industries. They produce very few jobs compared to the incredible demands they place on our grid. Crypto mining may actually make more money selling electricity back to the grid than from their crypto mining operations. Okay, so this is really a big deal. And this is just an ERCOT, okay? Basically, because of all of the demand increases, whether it's, whatever it's coming from, you're basically going to double the demand in Texas over the next 6 years. That's nothing in the utility world. In capital spending and engineering and planning, 6 years is nothing. And so what are they going to do? Are they going to have to curtail permitting for data centers and crypto mining operations or what have you? I mean, do we need to start looking at the, GE split up its business recently? Do we need to look at the energy side and what the gas turbine demand looks like now going forward? Are we going to have another boom in peaking plants and cogeneration? When I first got out of the Navy in 1997, I went right into the power industry, and it wasn't renewables. Renewables weren't even a twinkle in anybody's eye except for out in California and stuff like that. What the boom was, it was a natural gas fired cogen. They were building these things the way they're building renewables now. And they overbuilt, by the way. I mean, if you could fog a mirror, you could get a job building, operating, maintaining these power plants. They were going up everywhere. And it was the same situation. We had a lot of bozos that were in the business that because they could fog a mirror, they could get a job. And we had a lot of the same, issues, around quality and stuff like that, because the industry was growing faster than the ability. I use these analogies when I'm trying to explain things to people that I work with that are, that are linear thinkers. Yeah, we're going to grow. We're going to have all these projects, blah, blah, blah. I said, pump the brakes a little bit because you're in an industry, because you have because you have this demand coming, and because you have people see the IRA and they want to, make money. They just see the dollar signs. A big problem is labor and expertise. If I ask you, to use a sports analogy, if I say to you, let's double the amount of teams in the NFL next year, from what is it, 32 now to 64, what would the quality of play be in the NFL? What would be substantially worse or bad or not as good as it is now? Let's put it, that would be awful because there's not enough high level athletes to compete. Okay. The quality of play would go down. There's only so many top tier quarterbacks, running backs, wide receivers, what have you. You could field a team, but what would be the quality of play? And it's the same thing in these industries, in this business. It's not set up to just double in size in 6 years. If you want to be an apprentice electrician, it's a 4-year apprenticeship. So where are you going to get all these workers? And I'm seeing it, guys. I'm seeing a lot of problems. And so that's where opportunity comes. And this is a big deal that ERCOT's going to have to deal with. I mean, I'm not going to shut my air conditioner off down here when it's 115-degree heat index. And so what does that mean? Are they going to have to curtail the growth of the data centers? What are the people that are lobbying the legislature? I mean, they're going to have to do something, right? And are they going to be able to, I don't think solar and batteries are going to cut it, even though those things are going in everywhere. And so just because you can build the plants, can you build the, if you want to build a cogeneration plant that's natural gas fired, do you have the capacity of the natural gas pipelines to deliver the requisite gas to the plant? Do you build the data center just on the other side of the substation? And what's that do to the whole climate change argument? And if you want to go nuclear, you can't do it in 6 years. You can start working towards that, but it's not going to fix this problem. And so this is, I'm curious, this is what you're going to see. You're seeing this up around in Virginia, around DC and, Northern Virginia, where the tremendous growth in data centers. Dominion Energy's having same issues. They weren't ready for this. Okay. So again, this should be like telling you, hey, I need to be looking at this. Again, go look at go listen to the most recent couple of Eaton corporations, quarterly earnings reports and the comments from the management. You'll learn a lot about what's really going on. So, whoops, I'm jumping around here. Sorry if you made you have an epileptic seizure. So, this is just a short-term chart, but it looks like, gas looks like it's doing something now, natural gas, right? This is something that a few analysts, specifically ones that I follow, like Goring and Rosenzweig, have talked about. I mean, is this just a natural, we've had some heat waves with stuff like that. We've had more use, but this is a problem. This could end up being a problem. Now, I get asked in some recent interviews, what natural gas is hard for me. I haven't made a lot of money in it. I've looked at it. It's just hard to forecast. And, because of what happened in shale, if you get any kind of price increases, drilling ramps up so fast and the price gets crushed again. Because of what's happening in the Permian with the produced gas, you have negative gas prices at some points. I don't know if it still exists because the gas that comes with the oil you're producing in the shale, they either have to flare it off, or you do have people doing crypto mining with that gas, or they have to put it in the pipeline at negative pricing. is overabundance of gas. But the argument that Adam Rosenzweig makes, for example, is that we may be reaching a plateau for gas production in the U.S. Now, I don't know if that's the case. I would go read their most recent commentary. They get into discussing why they think that may be. But I think it's an interesting argument. Again, this may be the opportunity. Okay. The opportunity maybe go like, okay, I know GE, their 7FA frame 7 gas turbines. What's the order book looking like? What's really happening? What's Foster Wheeler, who builds a lot of HRSGs, which are heat recovery steam generators? What's their order book looking like? Is the actual spending coming for these power plants, these natural gas fired power plants? And that's some work that I'm going to probably have to do in the next, weeks and months to see if, everybody's talking about all this growth and demand, but is it translating to investment, and is there an opportunity there? So let's talk about copper, another thing that's going to be needed to enable all of this demand growth in electricity. Here's Codelco. This is the state-owned Chilean mining entity. Chile, of course, being the largest producer of copper in the world. I believe they still are. And this is a chart from Bloomberg. It's interesting, right? Codelco has the lowest month of output in nearly 18 years. World's #1 copper supplier hit by setbacks at mines and projects. So again, one thing I want to remind folks is that commodities and resources, like, they're priced at the margin. Remember, it just takes a slight undersupply or a slight oversupply, maybe even 1%, 3%, something like that, to cause major price movements either up or down. So if you have a slight oversupply, okay, that last pound of copper, that last ton of copper prices the other 26 million tons, okay? That's hard for some people to like understand and visualize marginal, at the margin pricing, but that's how commodity markets work. And that's why they're a little bit volatile, right? Because sometimes the information flow isn't the best, and so people read into things. But when you have the world's largest copper producer, you can definitely see a trend here, okay? You can definitely see this falling off, okay? And this is a big deal because, you remember they had the mine in Panama that has been shut down by the government and by the protests. That was like 1% of the world's demand or supply. And then you start putting this into the situation. You then throw on top of that, everybody wants to focus on demand. One of the things I've been encouraging people to think about for this, what I think is this super cycle that we're going to be in, yes, we're going to have demand. We're not going to have the same demand that we had during the last demand growth from the last commodity super cycle, in my view, that was Chinese driven, with the build out when they came into the WTO and the capital spending boom, they were just sucking in like a black hole all the commodities. I don't think we're going to see the same thing. We will see demand from emerging markets like India and Indonesia, but I think what's going to drive a lot of this demand and this or drive price in this super cycle will be the lack of supply not being able to keep up with demand. And it's going to be from things like this. Okay. I don't know why Codelco's suffering. I haven't deep dove it. Probably, a lot of the easy stuff's been found. They've probably been taking money away to use in social programs. I know the government there shifted to a more progressive government. Maybe they're not making the same investments. Maybe what's left to mine is probably harder. The head grades are lower. That means it's more expensive. It requires more capital investment. I do know that they have water issues, and the government has put restrictions on people that they have to like build desalination plants to get the water that you need. And so that raises costs. And so it makes it less lucrative. You need a higher price to make projects viable for capital investment. So maybe all of these things together tie in to cause this, or it just might be that, they've produced more than half of their resource, and now they're in, they're just going to be in slow decline. That could be the case too. I don't know. Again, there's not a shortage of copper in the Earth's crust. It's going to be going out and finding it. Nobody's spending any money has spent the billions of dollars that are needed to do the legwork and the field work and the drilling and stuff like that and the analysis. So what you're seeing is consolidation, right? You're seeing companies, the recent, I know it's a busted merger, I believe, but the BHP bid for Anglo American, right? So they wanted those copper assets. It's easier just to go on Wall Street and buy the resources than spend, putting together an exploration team, spending millions and millions of dollars and being aggravated and, drilling in these places. It's a big investment and it takes time. And if you haven't been doing that just to crank it up, it can be done. It's just going to have to spend money. And I think that's coming because as the price goes up, because of the lack of supply, but the demand is going to be there, price will go up and then we'll draw capital. So again, this is, instructive. So this is from top-down charts. I follow this person that emailed charts. I thought this was tremendous. One of the reasons why, the economy really hasn't rolled over, this is the CapEx boom we have here for factory construction in the US around the defense sector, clean energy, industrials, metals and mining, AI, reshoring of chip manufacturing. And, I'm not saying that this industrial policy the US is trying to run is going to be a good investment. I don't really know, but I do know that this is a big reason why you're seeing, guys at 2 p.m. flexing racing boats because there's not enough trades and viable subcontractors, so people are minting money. Okay, and this is probably another reason why. I mean, this is a straight moonshot. The whole reshoring, the Investment Recovery Act, the Inflation Recovery Act, whatever they call it, all that money that's being thrown at clean energy, all the money that's being thrown at batteries, all this reshoring of trying to create a chip industry from scratch here, moving industrial facilities back here, reshoring, if you will. Like I said, it's going to cost billions of dollars because over 40 years, as we financialized the U.S. economy, we got rid of all those choo-choo train industries. Drive through Indiana, rural Indiana, Illinois, Ohio, all those places where we had a lot of manufacturing. Go to Youngstown, Ohio, go to Morgantown, West Virginia, Wheeling, West Virginia, go to these places, go to, you'll see it, right? You go to where the old Bethlehem works were in Buffalo, New York, you wouldn't even know that, 40, 50 years ago, 30,000 people worked there in a huge steel works. You don't even see any remnant. There's actually a wind farm there now. So, because we have a policy of reshoring and now declaring, certain countries are arch enemies, we're not going to have the same trade relations. And so we're going to have to bring us back, and we're not set up to do it. That's why we have this inflationary impulse that's, hard. I was reading one person that I read that issued a report that they think that the Fed's actually going to raise rates going forward because because of all what's going on here with all this spending, and because we have a lack of supply of materials and suppliers, labor, that the inflation rate is just not going to be able to get down to that 2%. Okay, so they're going to have to induce a recession to really get this down, because you have throwing all this free money at this, and you have just the inability because of the lack of the infrastructure, the labor. Like I said before, it's causing this higher level of inflation. So we'll see how it works, but this is this is pretty dramatic, right? All of a sudden you pass certain legislation and everything pretty much doubles in construction. Well, I know this has Japan in here also, but I mean, you're getting the point. So this is another thing that I've been looking at. We know for a fact that we know that oil fields don't last forever. We know that oil wells individually don't last forever. We know that, a geologist named King Hubert, wrote a thesis about this in the 50s, and he was a shell geologist, about how fields produce once they produce more than 50% of their reserves. they tend to go into terminal decline. Okay. And he demonstrated that. And so you've seen, the ability again for shale in the US to carry the growth in supply that was required for the last basically 12 to 15, 10, 12, 15 years in the world. Basically the growth in shale basically added another Saudi Arabia, if you want to call it that, to world oil supply. And that was why, that's where all the, demand was sated, was by the shale, increase in shale. But have we reached the peak? Have we got to a plateau? Are we going to slow down? If we do, the lack of investment in the rest of the world that didn't happen because shale lowered prices, uh, and caused people to not want to invest in longer, because shale is so quick to come online. People didn't want to invest in longer lead time products projects like offshore that were high capital expenditure, long lead time. You're just not going to go to the board and say, I've talked about this before, why would we go offshore, take all that risk, spend $10 billion, and then we won't see first production for 5 to 7 years, when we can just buy some shale property and get a high recycle? The wells come online quick, you get paid out, and the returns are a lot higher. So that's what we saw, right? Plus all of that private equity money that was thrown at it a few years ago, where there was a point where nobody was actually even having positive cash flow after $250 billion investment. Now that was great if you were an oil consumer, because it kept the price down. We were oversupplied, but it's not a cornucopia that was going to last forever. And so this is something I'm really intrigued by, because the implications for energy supply and oil prices really, I think, are this is going to have a big impact, and if certain analysts are correct and we've underinvested, then this is going to be a big problem. And so that has tremendous spillover effects into other things. That's why I'm so bullish on offshore oil services. That industry got decimated. Now it's ramping back up. And again, there's just not the people, the boats, the rigs to absorb all of that investment that's coming. And so it's not something you can just fix in a day or two, or 1 year or 2 years. And so prices go up for boats, prices go up for labor, prices go up for rigs. And that creates a period of excess returns that we can take advantage of. So let's go back to shale. This was an article from Bloomberg. I'll get these energy emails from Bloomberg I signed up for, so I don't have a link to an article because this was via an email, but I think you'll get the point. It says shale's $250 billion wave of acquisitions during the past year makes it less likely the U.S. will surprise oil markets with blowout production growth this year as it did in 2023. They have an analyst quote here. It says, typically the new entity drills fewer wells than the two companies were drilling prior. Of course, you combine two companies, they want to downsize, they want to find efficiencies, and so it's like, okay, you were drilling 100 wells, we were drilling 100, but the combined entity is only going to drill 150 instead of 200. And there's a reason why, right? They want to there's no reason to overproduce now. Shareholder returns are a big component now for these managements, not just drill baby drill. And these are crown jewels. Why go out and overproduce or go crazy producing when you have a longer runway now? That's the point here. And so you have all this deal making going. Again, there's only so much acreage out there and locations, and you're seeing a lot of big deals, like, $250 billion in acquisitions during the past year. That's just in the U.S. shale market. So is this what's the effect going to be on this? Because if you look at I didn't get into all the things, but they give some examples of some recent acquisitions and how the announcements of that the companies weren't going to, after they combined, the net amount of drilling would be less than the two entities by themselves. So another thing to look at, why blow your wad? What's the point? Just we've seen a lot of the CEOs say this out there in these public companies, at least, not necessarily the private companies, but a lot of the private companies being bought out now. And so they're saying, look, I don't have to just drill, baby, drill. I'm just going to have spend enough money to have some small production increases and, harvest this crown jewel of assets over a longer period of time. And I think that that's something to look at. Not only that, again, what are these locations looking like production wise? That's something that like Gorian and Rosenzweig have been talking about. They've used AI to kind of analyze this, and what they seem to be making an argument for is the fact that a lot of the tier one locations, the better locations, have already been produced. You're now getting into areas that aren't as prolific or productive, and so you're going to see, less production growth. Doesn't mean, I mean, these areas are going to produce for years. Okay, that goes without saying, but you're not necessarily going to see the growth in production. We're bumping up around U.S. production right around 13 million barrels plus a little bit, but are we going to go to 14, 15, 16, 17? Likely not. And so world oil demand continues to grow, and it will continue to grow at 1.5% a year. So you're at 103 million barrels a day. In 5 years, what are you going to be at? 108, 110 million barrels a day, maybe more. So where is that supply going to come from? It's going to have to come from non-OPEC, outside of shale, deep water, offshore, other places like this. So, and again, a lot of the investment didn't happen. A lot of the support, the ability to drill and operate in those places has shrunk over time, has atrophied. And so now if there's a big surge in capital spending, which is starting to happen, by the way, it's not a surge, but it is increasing year over year. We're seeing that growth. The industry is not able to do that, so prices go up, margins go up, and we benefit. So that's the point we're trying to make here. So I wanted to show this a couple things. This is from U.S. global investors. Their point in this graph was just to show that the Indian economy to be one of the top growing economies, which it is. I'm bullish on India, obviously. But I wanted to point out something else here. This is Guyana, for example. That's where the big oil finds have been recently. The economy is going to grow 33.9% there. That's a lot. So, that's one of the things I've been following, that economy. I don't really see a way to invest there. They do have a stock market. There's real estate. It's one of those things where you'd have to plant yourself down there and live there. But I think you could make a lot of money in real estate and some other things if you wanted to be a wheeler dealer. But you'd have to live in Guyana. You can't just do this from your laptop. I'm not willing to do that. Maybe if I was 25 or 30 years younger, I'd go down there, and I'm sure there's probably so much money flowing. If you have any expertise or squared away at all, you could probably get yourself into something pretty quick that's lucrative. Supply, setting up training centers, whatever. I mean, it's a little bit of a dangerous place to live, and the amenities aren't the best. But that's one thing I wanted to point out. The other thing I wanted to point out here is Niger. Remember, this is the economy or the country that had the coup and kicked France out, right? Or wants to kick France out, throw the yoke of French colonialism off, and coup, and now they're bad people, and they've asked the U.S. to leave now, but they're trying to negotiate something. Russia's moving in, and this has a tremendous amount of uranium resources, by the way. France gets a lot of their, they have a very large nuclear component to their energy grid. And they get a lot of this stuff from Africa, Niger in particular. And so this is a problem now, right? But look, even in a country with a coup, they're projected to grow 10%. Okay. These are from very low levels, granted, but think about it. I mean, this is the kind of this is what the whole BRICS thing's about. People don't want to be under that Anglo-American yoke anymore. And if they can break free, that doesn't mean they won't be under a Chinese and Russian yoke. I don't know. I'm not suggesting that we're moving to a better world. I'm saying we're moving to a different world. And, what the Chinese and these other folks are selling in BRICS is win-win outcomes, not a, master-slave relationship that we have in the Anglo-American hegemon. or at least the perception of it among a lot of these emerging markets. And so this is why, when you see things like this, people are more apt to say, Senegal's another West African country. Obviously, Libya was destroyed by the U.S. in the nonsense that we did there. I'm not going to get into that. Rwanda, another African country. Another reason why I'm bullish on Africa, there's 52 odd countries there. Some of them are basket cases like, Equatorial Guinea. Some of them like Rwanda, even after they had their ethnic cleansing situation, many years ago, has emerged as a very dynamic growth economy. Places like Botswana have been doing well. We've talked about obviously other countries. So there's opportunity there too. So there's always opportunity, right? I mean, if you have a few bucks and you're young and you're ambitious, why not get on a plane and go to Georgetown, Guyana, and find out what's going on down there? See if you can get into something. If you're interested in doing something, you show up in there, you find out who's some of the top law firms there. You go there, you make an appointment, you want to talk to the lawyers. Why? You want to put them on retainer. You just say, I want to put you on retainer because I may be doing business here. Then they know that you're a player. They only know what you tell them. They don't know if you're a family office, if you're a multimillionaire. If you go in there, come correct, I want to put the law firm on, then you're going to start, because why? Because it's kind of like, Al Pacino said in that movie when he was playing with Reeves, when they had that lawyer thing, and he said, why do you want to be in the law? Because the lawyers are in everything. So I know many people that have followed this model and become inculcated with government officials, business leaders, especially in a small country like this. And again, people only know what you tell them. Okay, I'm not saying you go there and lie and misrepresent yourself, but if you follow a certain methodology, people recognize you as, you're not just some schlub that stumbled off the plane, in a Hawaiian shirt, wiping sweat off your brow. You're a player, you know how things are done, and you start making introductions, and then you start understanding, you go, I've been in these conversations I fell into in just sitting at a bar having a beer, and some mining executive from a major mining firm is lamenting to me the fact that the government's after him about certain safety things, and he can't get safety equipment in the country. Right there, that should pop in your head as an entrepreneur. Well, what do you need? When do you need it? What are you willing to pay? And can I just get this stuff in here for you? I mean, I know of a guy that did that, something similar. Somebody was lamenting. He went down to Singapore or Hong Kong, got a couple containers full of safety gear, brought it up there, and that started a business of some kind of, because you go to some of these places, I guarantee if you go to Guyana, there's no Granger or MSC for industrial supply. And I'm quite sure on offshore, they're looking for this stuff. A lot of these larger companies, especially when they're having these super huge projects, they don't want to get involved in the minutia. They want to stay into their core competency of drilling for oil or mining, and they like to just sub out a lot of the stuff. So if you show up and you can actually do something, then you have an opportunity to maybe do something entrepreneurial. So kind of got off track there a little bit. I know this isn't for most people, but that's how fortunes are made. So I wanted to point this out also, U.S. Navy, the greatest Navy in the world. When I was in the Navy, one thing that was always one of our core mission statements was keeping vital sea lanes open for commerce and for the United States, for our commerce, because we're a maritime power, right? Shipping, commerce, sea lanes, choke points, Suez Canal, Panama Canal, Straits of Malacca, this type of stuff, all right? And so now we have this group of Yemenis that are being supported. They're a non-state actor, I think, because I think there's a civil war going on there, right? And they've decided to throw in with the Palestinians because they don't feel what's going on in Gaza in the West Bank is cool. And so they've said, hey, we're going to make it difficult to bring shipping through there for any countries that are supplying things to Israel. I know they've shot things at other ships. Long story short, insurance companies, shipping companies just say, hey, we're not going to go through the Red Sea. We're going to go around the bottom of Africa. And that creates longer journeys. There's only so many ships, so ton miles go up, right? The cargoes take longer. That's more rates go up. Things are disrupted. Prices go up. Supply chains get drawn out. And so what you don't hear about in the news is, this is kind of financially, it's benefiting a lot of the shipping stocks that we have in the portfolio. Cash flows are really benefiting from this. But the other thing I want to make the point is, if the U.S. and its vassals and allies are the hegemon, why can't they deal with this? Remember, they sent a task force over there. Remember, they were bombing them. They were doing all this stuff. And yet this sea lane's not reopened. You see the volume of traffic through this transit area. The strait has dropped off since they started firing missiles at ships, and it hasn't returned. So the coalition of the terminally stupid, what are they doing? They can't get this sea lane opened. Now you want to start up a war with China in Taiwan, which is right offshore of Taiwan, and you're, 10,000 miles away from the west coast of the U.S. This is why I talk about this stuff, guys. This is why this is important to understand what's happening in the world. Some people don't like to talk about this because they think it gives them brain damage or it doesn't apply. This applies. I have shipping stocks in the portfolio that the rates have went up and the cash flows have went up just because of this. This is affecting world trade to a certain extent. There's only so many ships, and if they have to travel further with cargoes, then the prices go up for the cargoes. You pay the price. It benefits the shipping company. Yes, they can build more ships to alleviate this problem. That takes years. It's not going to happen in 6 months. Again, this is another way that you take advantage when opportunity presents itself. I don't control U.S. policy. I don't control the Houthis. I look at the situation for the way it is, and then I see it's not been fixed. So rates for certain shipping is going to stay high because people aren't going to risk going through there and having their ships destroyed and have their insurance rates blow out. It's just easier to raise prices and say, sorry, you're just going to have to pay a higher rate. We're going around Africa. We're not going to cut through the Suez Canal. Now it's affecting Egypt because their revenue has dropped quite a bit for the tariffs that going through the Suez Canal. So there's a lot of spillover effects, and that will always create an opportunity. Okay. And that's what you have to be open-minded to. And again, going to the geopolitical thing, why can't the U.S. Navy deal with this? There was a rumor, I don't know if it's true, that the Houthis damaged the, I think it was the Enterprise, the carrier Enterprise, but it was never verified. I know that they were operating in that area and then they left and went 1,000 kilometers away all of a sudden. So there were rumors that the ship had been attacked or had been hit and damaged sufficiently. And so I've always said that this is what's going to end the era of the carrier battle group, is this missile technology. They're gonna start it up with somebody one time, and there's just these carrier battle groups are going to be overwhelmed with the missile barrage, and you're going to sink some of these carriers, and it's going to shock people, and that'll be the end of it. I mean, can you imagine? You started up with Iran. They somehow sink one of these things, then they pick up the survivors, a couple thousand sailors, and then take them prisoner and are marching them through Tehran, and that's on the world news. Can you imagine? That would be the end of the American empire. I mean, so I'm not saying this is going to happen. I'm not relishing this to happen. What I'm telling you is that we're way over our skis, and if we can't even deal with the Houthis, why are we trying to start a war with Russia or China or Iran? We can't deal with this problem. Our top-notch military that we spend $890 billion a year on. They can't deal with, a non-state actor that's firing missiles, and you're going to project power. So this whole fantasy about projecting power around the world and keeping sea lanes open, is it actually true? Can we actually do it? Once we're shown that we actually have to do something, can we do it? Or was it all, is it a paper tiger? Was it kabuki theater all along? Something to think about. So when this is now, as you know, we're drifting into the realm of some politics, and I thought it was amusing. I enjoyed the European Parliament had elections last Sunday. We now know the results. The tremors and repercussions from this, I didn't think it was. I thought there would be a swing to more right-wing parties, more nationalistic parties. That's where things were trending. We didn't get like clean out the Ursula von der Leyens and that people. They're still going to be in power to a certain extent, but there was, I think, a lot of these parties outperformed expectations, and so now we're starting to see the pendulum swing back the other way, to the point where Macron in France decided to have snap elections. He's betting that, yeah, these were European Parliament elections, but when the French people are put to the vote, they'll come to their senses and not endorse Marine Le Pen's National Front Party or National Resistance, whatever they call it now. It's basically, a nationalistic French nationalistic party. We'll see. We saw Olaf Scholz's coalition get smacked upside the head in Germany. This is all things that we've been talking about, that we said that if you allow unfettered immigration from sub-Saharan Africa and the Middle East into Europe, incompatible cultures, specifically Islam in there, people were going to react negatively to that, the native population, and you would see the politics change. It's starting to. That's one reason. The Green New Deal, nobody wants it. It costs too much. It sucks. People are rebelling against that. And this thing with Russia, people don't want to have, the people in Western Europe don't want to have a war in Eastern Ukraine with Russia. They don't want this, okay? And yet the globalists that run the EU don't care. Again, let me remind you of Annalena Baerbock, who's the foreign minister, I believe, of Germany, said quite frankly, I don't care what the German voters think or what they say. We're going to go all the way with Ukraine. That's what she said. I'm paraphrasing, but I reported that, she says like this a year ago. Okay. And so now, shutting down the nuclear plants, the CSU CDU coalition, which is an opposition, is having hearings now about, the sham of shutting down the nuclear reactors in Germany. And so, again, when you have policies that are basically negative to the populations of your country, basically what I've said before, I know this is hyperbole. People, I'm making provocative statements. If you hate your own country people that you're supposedly representing, they're eventually going to rebel. And so we're starting to see the beginning of this. Okay. Now, that doesn't mean it's going to change in one election cycle or will go all the way and change. I don't know what will happen. But those are three things I just mentioned that people in Europe, Western Europe, don't want. It's clear from the polls. Okay. People don't want to get into a shooting war with Russia. People don't want higher cost energy, the Green New Deal. They don't want it. They've rejected it everywhere because it costs too much. Okay. And people don't want this unfettered immigration and all the things that go along with that. The crime, the rape, the assaults on the street, the robbery, and just the change in the culture of basically people, again, they see that their country is being changed. They're becoming sub-Saharan and Middle Eastern countries. And people are now waking up and saying, I don't really want this. Why? And the only outlet they have is to vote. And so they're doing that. Will it matter? I don't know. We'll see. Vote harder. Usually these things are not fixed by voting, but we'll see what happens. And so here's from the article. I'll put a link to it as a Politico article. I put here as the slide title, EU Parliament elections. Every action has an equal and opposite reaction. Far-right parties dominated provisional results in the European Parliament election, triggering a snap election and a political crisis in Paris and soul-searching in Berlin, where the ruling coalition was humiliated. In a shock move, Emmanuel Macron dissolved the French parliament after Marine Le Pen's far-right national rally won the popular vote with 31.5%. Its best ever result in a nationwide vote, according to early estimates. We now know that that's true. This is article is probably not the most up to date. Fresh national elections will be held on June 30th. The crushing blow for the French president came as the far-right Alternative for Germany. I like how the press always far right. You know what they're kind of winking about far right in Germany. Come on, guys. Alternative for Germany would be like a conservative party 20 years ago. Anyway, celebrated, quote, a historic second place finish ahead of Chancellor Olaf Scholz's Social Democrat Party, according to projections. So we'll see what happens. You're seeing, again, more and more countries, especially in Central Europe. We already know Viktor Orban in Hungary, what he's against this war. He's against this immigration. He's already said that Hungary will not be blackmailed. No amount of money can be given to them to go against their national interest. You saw what happened in Slovakia, where the president of Slovakia, I believe his name is Fico, last name, Robert Fico, there was an assassination attempt on him. He got shot like 4 or 5 times. I think he's already recovered. And they're against the war in Ukraine. They're against this, a lot of these things. So, we'll have to see how things go. Is it too late for some countries? I don't know. Let's not be too optimistic, because in the UK, Labour's probably going to come back into power. We've seen recent elections there, like at the city level, where we've seen quite a few Islamists become mayors of cities, because this is where the population's, right? This is what happens. So this immigration stuff is really, and I think that's going to be a major issue here in the United States. Just this 8 to 10 million people that have come in during this administration, and no one's explained why. Is it for cheap labor? Is it just because you wanted to spite Trump and reverse all of his policies? What's the plan? What are we doing here? There's people say it's conspiracy theories. I don't. It's a fact that the census determines. It doesn't mean U.S. citizens. All the bodies live in a district or in an area are counted, and that goes to appropriating congressional districts, okay, and electoral votes. That has something to do with it. Cheap labor, the U.S. Chamber of Commerce, your business interests, your big business, even small business, farmers, they want cheap labor. But I think this can be done without just opening the floodgates and letting everybody in here undocumented. I grew up in South Florida. I know what they did in California. They had migrant worker programs. You would come over, you would work for a period of time, you would make your cash, okay, working in the fields, cutting sugarcane. They used to cut sugarcane by hand when I was a kid around Lake Okeechobee. They've mechanized it now. They used to fly over like DC-3s they used, and they had these block housing away from Belglade and Pahokee, and they would keep the Jamaicans and Haitians out there. They would work during the cane season and then go back to Jamaica and Haiti. That wasn't a problem, okay? They would make their dough in the U.S., get paid well, go back. Everybody was benefiting. That is what I'm looking for. I'm not looking for just open the floodgates and everybody just pours in here. We don't even know who's here. In the meantime, you have people being exploited, by the cartels in Mexico, charging $5,000, $10,000, $20,000. Women that come from Central America carry Plan B and birth control with them because they, a third or 50% of these women are raped along the way. I mean, this is not, nobody really knows what's going on unless you're down here or you really pay attention. People, and that's not compassion in my view. And so I think people are rebelling against this stuff, especially now you're seeing it, especially since these governors in Florida and Texas and others, excuse me, have shipped these people to other states. And so the populations that are the historic populations there, even African-American populations, are like, wait, you bring all these people here, we already feel like we're not being heard or getting enough resources for our community for decades. And then you bring these people in and you give them all of our resources. People don't like that. Okay. And I don't think it's sustainable. That's why I think you're seeing a political shift around even minority people. It's not going to be Ronald Reagan 1980 Mondale, where Trump wins every state. This is a big reason why he's doing well. Okay, people don't like this. They don't want it. Even here in the Valley, where it's majority Hispanic, people came over here legally. They understand that if you flood the place with people from these places, wage rates go down for them. They understand that. And so that's why you have this is traditionally blue dog Democrat type situation, but yet it's getting purple now in some areas. And so it'll be interesting to see what happens. Again, I'm not optimistic about democracy in the long term to fix these major issues. And again, people are getting riled up, but remember, the progressives and the globalists and the neo-Marxists, this is all they do. So it's 2 steps forward, 1 step back. And so maybe you have this rising fever of nationalism and outrage, and then you have an election cycle, then it kind of dies down because the average person has other things to do except devote themselves to overturning the world order or what have you. And these other people, that's all they do all day, every day, and they're financed by billionaires and the governments, the globalist governments themselves. So it's it's fighting an uphill battle, but we'll see. But I thought this was not only different than my expectations. I thought there would be a movement towards the right, but I thought this was a lot of this over exceeded my expectations and a lot of analysts, I think. So we'll have to see if it carries on. We'll have to see what happens in France on the 30th. We'll have to see what happens in Germany as we go forward. So it'll be interesting to watch. And of course, we have our own election coming up in 5 months, right? So anyway, that's it for this week, guys. Appreciate your support. Appreciate the views. Channel, it's just a slow growth. We're just grinding higher. We ask that, if you like what you see here, if you like this work that I do, that you subscribe, you share, you go to my Substack. We have that free email you can get every week. I don't bombard your inbox. You get 1 week videos I'm looking at, articles that I'm reading, thoughts from other thought leaders that I find interesting. A lot of people find that useful. And then obviously we'd always like you to become a subscriber to the Actionable Intelligence Alert paid version, which is on Substack also, where you can drill down to specific ways to financially take advantage of some of these ideas we're talking about. Okay, guys, that's it for this week. We'll talk to you next week. Thank you.